let's talk about what the show was like when you used to be on it.
Mm-hmm.
What were some of the things you used to talk about?
Oh, man. So it was Matt Copenheffer and I, who he has since he moved to Germany and runs Fool.de, our German site. So once Matt left, we kind of had to reorganize the show and kind of gave birth to Industry Focus. But used to be, I'm sure many of the listeners listened back then, but it used to be 5 days of all financials. So I'm sure many people are happy that it's just one day now.
That sounds really stressful. I was trying to come up with topics for the show, and there's not a lot of news in banking, which is good.
Mm-hmm.
That's good because normally when there's news in banking, it's bad news. It's like a college buddy who calls you up and they're like, hey, how's it going?
It's 3 a.m.
I need you to bail me out. And that's like the only time they ever call you out. That's what it's like with banking news. So it's like kind of nice, but it's also kind of stressful for me because I have to come up with things to talk about.
So, I mean, we try to keep it fresh. We had a lot of games. Investing Chicken, True or False, Fool in the Blank was an audience favorite. So we kept it fun, but it's really good to be back. I've listened to the show, all the different segments we have now, so I think it's really cool.
Awesome. I think I'm going to have to talk to you later about segment.
Fool in the Blank?
Yeah, I'm pretty excited about that idea. So I hear that you were really bullish on bank stocks 1.5 years ago.
Mm-hmm.
Has that changed?
It really has not changed. I mean, and if you go in and look at some of the large banks, which I was more of a fan of the mega banks. I was a big bull on JP Morgan around a year and a half ago. Even further back then, over the last 3 years, I've been a fairly big bull on the big banks. And when you look at the performance over the last year and a half, you'd be like, I'm glad I didn't listen to that guy. I mean, I was looking this morning, and over the past 18 months, almost every single big bank is either flat, up 5 percentage points, down 5 to 10 percentage points. So it's been a really kind of boring year for those stocks, and I guess my portfolio, which is heavily weighted towards the financial stocks. So I was a big bull on them just from a valuation perspective. There was a lot of pessimism, and I still think there is a lot of pessimism built into the big banks. But some of the catalysts that I was kind of building into my thesis in terms of rates moving higher, yield curve getting a little bit steeper to make more interest income, as I know you and Jay talked about last week, it's just been a tough environment for the big banks that rely almost half of their revenue or more is from interest from loans. So that has not materialized. We were looking this morning, and rates are lower over the past year and a half than, I mean, that's crazy. Everyone was like, 10-year Treasury can't go lower than 2. And now we're 1.7, 1.8, 30-year Treasuries under 3%. So these are catalysts that, if they would have gone the other way, I think would have really benefited banks, and you would have seen earnings tick up and the valuation multiples hopefully expand, which was also part of the kind of big bank thesis. So those things just haven't really happened. I still think they're going to happen, or I hope they will, for the sake of those stocks that I've been a bull on, that I own.
Well, and not just them, but for the economy in general, because
exactly
those are signs that the economy is not doing great. It would be good if they went up because it means that we're all doing better.
Right. And then we're judging this on a year and a half basis, which can seem like a long time in investing for certain things, but you also have to step back and say, all right, it didn't happen over a year and a half, but that's a pretty short time in kind of the banking cycle. I mean, we're not even to 10 years since Lehman Brothers and the financial crisis.
Yeah.
And in the scheme of history, that may take another 5 years to kind of fully wash out of the system. So it's kind of humbled me from the fact that you can maybe be right on a thesis and maybe it still happens, but getting the timing right and having everything line up exactly when you want it to does not always happen. So I still am a believer in some of the things that guided my thesis a year and a half ago on the big banks, but it just hasn't happened yet. I still think maybe it's this next year or 2 years from now, but still a believer.
Your fundamental thesis hasn't changed.